everyone. Welcome back to the Novice podcast, where we break down complex financial terms in a simpler form just for you. If you missed our previous episode, go back and watch it like ASAP. So today we'll be having a juicy conversation, about investments and what you should know. And guess what? I'm never alone in the studio. I'm with someone, a guest. In fact, drum rolling. I'm with Muktar Mohammed. Good afternoon.
My pleasure being on your program today. Thank you for having me.
Yeah, you are the CEO of Asher Investment Limited, right?
Also the founder of Finance with Muktar.
Wow, so good. That means you have a lot of answers to give me on investment, right?
Definitely.
So I've been wondering, like me now, December is by the corner. I want to flex, I want to turn up, and my salary is definitely not enough for the lifestyle I'm about to live by December. So do you know, like, I've been hearing about investments, I've been hearing about stocks, and I have a lot of gist for you technically. So what exactly is investments, and what exactly am I to know about investments?
Well, sometimes you say it's for the novice. So the best type of investment you need to know is that when you're talking about investment, you're thinking about assets. Basically, you're thinking about asset acquisition. You're thinking of building assets that generate money.
Exactly.
So that's investment. Investment is all about assets that generate money. So it depends on what type of investment you want to do. Some people could say investment could be, oh, my money is bringing me returns, maybe
like a doubling scheme.
Yeah, well, definitely not that type of scheme that you think they tell you put 5 naira, get 10 naira. No, that's not what I'm talking about. Investment must be something that is driven by fundamentals. But again, in a layman term, when I say investment, it's all about whatever is asset I'm building that will generate me wealth over a long time.
All right. So, yeah, stock. I've been hearing stock. I've been seeing it on the news. In fact, if you follow us on our metrics, you hear us talk about stock. What exactly is stock? Is it a branch of investments, or what exactly is stock?
Well, Nairametrics is doing a great job when it comes to stock. At least they are enlightening a lot of people. So definitely, what's stock? Stock's another part of it. It's another part of investment. And what it means is that you set up a company, and the company is saying, okay, are we coming to the market? We want people to buy our shares, to become part owner of that share, depending on the unit you buy. So in a layman, I like saying in the novice.
In the novice, yeah, this is true.
It's like you are owning a particular share of, let me give, maybe a bank, and whenever you pass that bank, what it means is that you're owner of that bank. So what it means is that anytime that bank make profit, they are going to pay you from that profit. And sometimes you can say what it means is that anytime you see the staff of that bank going to work, they are working for you because you won't be there to generate.
My money is working for me.
Is working for you, and that's what we talk about investment. When your asset is generating some money for income for you that you are not actually present. So I say it is when you are sleeping, somebody is making money from you. When you wake up, somebody is making money for you. So that's definitely what the stock is. Owning a part ownership of a particular company, depending on the unit that you buy. Sometimes some people can own the own company. Some people can own 20%, some can own 30%. The founder or the owner of the company can own 90% and decide to give 10% to other people to own. Some can own 40% and decide to give some percentage to individuals, or companies even. So it depends. So what it means in a layman is that part ownership of a company.
So yeah, that's nice. I really like your explanation. But so when it comes to stock markets, when it comes to investments, is it age bound? As a Gen Z, I've read and I've seen when people talk about, at 20 you should have about 5 investments, at 40 you should have about 50 investments. With someone like a 9-to-5 that earns 200 or 250K, how can I own such, investments or stock markets or, shares in all these companies? Do I need to save up the whole year, pack my money, and then, that's it?
Yeah, so the bit about investment, it has to be a habit. First, it must be a habit. It must be something that you have passion for.
Okay.
Because it's not something that you just grow into it. You have, Like it's just like waking up in the morning to do an exercise. The first time you start, you struggle. Second time, then you start, as you keep doing it, it becomes a habit. And the day you don't do it, you feel, there's something not right here. So once you start investing, what it means is that when money comes to your hand, when you don't invest, you feel that there's something that you have done wrong. That is one. Then secondly, to your question about how do I invest, the beauty about this stock market is that you can start with any amount. You could start with 10,000. You could start with 5,000. Let me give you my own story. I started with Zenith Bank first right issue, my first IPO, and at that time I think I bought like 5,000 units at 10 naira 80 kobo per unit, and so you could start like that. So the beauty about the stock market is that you, with as little as 5,000, 10,000, you can begin to buy. It's just that you must buy a unit about 50 or 100.
Yeah.
So you could start, say, okay, you target a particular company. You said, okay, this is the company I want to be buying stocks for because of what I think they are doing. Then you start just putting in little by little. Then you say, okay, you want to grow your portfolio in that company. You see another good companies, you continue like that with a strategic plan. You must have a plan, because what it means is that when you want to invest, if you are looking at, oh, my money must be up to date, it's never enough when it comes to that. But when you have that strategic plan, then it has become a habit, and you have your plan that, look, I want to own part ownership of this company. I want to own a part ownership of. Sometimes I tell people that, oh, one of the things we do mostly in Nigeria now, everybody has a phone, and you say, oh, look, I want to begin to make money out of this phone. So which phone company? I buy a share of MTN. So what it means is that, by every phone call that happen in this country, there's a particular one that will come to you at the end of the day as a shareholder. So you could start as little as
Because
10,000.
I know a story, of my flatmates. She saved up from January till I think September.
You see, when it comes to investment, it has to do with the plan, because sometimes people say, oh, I want to save, and sometimes things come up. Not everybody is as disciplined as your classmate that saved from January to September. Because with the beauty about the stock market, like I said, with 10,000 you can start. With the next month you can start. You can do it a monthly thing, you can do a quarterly thing, you can do a yearly thing. It's up to you. But sometimes my advice is, as money comes to your hand, those money that you think, oh, if I keep keeping this money, I will spend it. You can just own there. I have people, high net investors, very high net earners that sometimes they do as a little as every week. Hey, oh, I just have this 200,000. If I keep it, I will spend it. Invest, buy this stuff for me. 300,000. Buy this share for me.
That brings me to my question. So keeping your money in the bank is a different ball game to investing. Because I have like, I think 10K in one account, and then, at the end of the month, because I didn't have an ATM card, I couldn't withdraw the money. And then at the end of the month, I'm seeing like 10 naira, 20 naira interest and all of that. Will you call that an investment?
Well, it is, because it's earning something on your money. But again, it's relative. What I mean relative is earning something on your money. But what you look at is what is it earning in your money? Is it comparable to inflation? So when you're investing to beat inflation.
Yeah. We talked about inflation in our previous episode. If you've not watched it, go back and catch up.
So you're trying to beat inflation by investing. So any money that's not beating inflation is not like an investment money. It's just a money that's earning you something rather than just being. And the reason why you earn that is because you've not withdrawn
the money.
There are particular part of the social type product that the banks have that if you do up to like 3 withdrawal, you won't get that interest that's being paid on it. It's just because you didn't touch it,
the money.
So they need to add up something to it. So it's not the same as investment. It's just that you are putting your money there. Your money is earning something for you. Like I said, that's not an asset. An investment is an asset that grew over time, appreciate in value. So that's what you call an investment. An investment is not the same like when you left it there. And again, it's an asset that appreciates in value, and an asset also that you can also sell. And also, you let me give an example. You buy it at 1 naira, then you sell it at 2 naira. That's an investment. So, but your money in the bank, you only withdraw it, so you don't invest it.
But I'm actually curious, as I talked about my classmate, after she saved up her money and then she packed the money and went to invest in, I think, hens. And then the next, I just left her for a while, and then I asked her a couple of days, so what's up? Are you checking your investment? And she was like, I deleted the app. I was like, why? Why did you delete it? She was like, she didn't want her BP to be rising because she doesn't understand, stock market and investing. Do we need to know the company? Are they like branches? Is there a bank company we invest in? Are they food? Are they transport? When it comes to investments,
You must know the company you're investing in, definitely. What are they into? What are they doing? There are some people that will say, look, I won't invest at a particular, I don't invest in this type of company because either my religion or my faith or my morals doesn't accept it.
okay.
So that's one. So sometimes it's good to know the company you invest in it so that you know whether it's a profitable investment. The first key towards investment is, especially when you invest in the stock market, the first rule that was set by Warren Buffett is say don't lose them. Don't make sure you don't lose money. And the second rule is the same rule: don't lose money. That's the same rule. Then, but again, you see, the stock market is the market that takes money from the impatient and give to the patient, because the stock market is not a sprint; it's a marathon. So unless you have to know that, look, where you are in there, you are in there. There are different type of people that comes to the market. We have investors, we have traders, we have speculators.
Because I was like, is forex trading similar to stock market investment and
They are similar in a way because you trade. That's how I'm going to. Now, investor. An investor is somebody that believes in the company, that believes the company will grow, that look at the company like his child, that is saying, look, I'm here to stay. I'm going to keep buying that stocks, and I want to see that stock will keep on generating me income. That's one. That's for an investor. A trader is somebody that goes in there, he buy at 10 naira, he put his mark on that. When he gets to 12 naira, I'm going to sell off. Or when he gets to 15 naira, I'm going to sell off. That's a trader.
That's a forex trader. Okay.
Then a speculator, he's the type, he doesn't look at anything. He just look at the price. This company price is 2 kobo. Once he get to 3 kobo, I'm going to sell. I'm not interested in the fundamentals. And sometimes you buy a fundamental company, you say, wow, this company is good, but I'm not going to hold it more than 1 month. I don't care. So those are speculators. They are just there to make quick money, but not based on fundamentals. But an investor is normally driven by the fundamentals of the company. He looks at the company, he wants to be there for a long time, so he keep on buying that share of that company, buying that share. On the long run, that company itself can be generating income for him, what we call passive income.
I've learned a lot from this conversation, but I still have much questions to still ask you. So when you say investments and investing, do you need to regularly look at your portfolio? How often should I be glued to my portfolio? I think it's called a portfolio, right?
It's called a portfolio, yes. Should you regularly? It depends. If you're a trader, like I just said, you should regularly view your portfolio because you want to know what is happening. If you're a speculator, it's even worse. You should be with the computer, with the app, and looking at what is happening. If you're an investor, you're not so much worried about what is happening. For an investor, whether the market goes up, whether it goes down, he sees it goes down, he's so excited. He say, oh, wow, it's an opportunity for me to buy more. He goes up, he's so excited, and sometimes he could be sad that, why is it going up at this time? I think go down so that I can buy more. So it depends on where you are. And I keep telling people, when you're investing in the stock market, like I said, it's a marathon, it's not a sprint. I give a story. When COVID came in 2020, the market, the first day they said COVID has come to Nigeria. They discovered the first COVID case. I think it was on a Tuesday. I thought on a Friday, people like me had our portfolio wiped out by almost 50 million. So at that time, it's not the time to begin to panic or look at the portfolio and begin to say, wow, what's going to happen? Because you said something before, talk about knowledge. Because you have knowledge, you said, wow, this is an opportunity. Once they keep going down, I'll buy more. But again, that's based on if you have liquidity. So, as an investor,
we'll come back to liquidity.
as an investor, you always have to be proactive. Somebody said something about the stock market. The stock market is where, when it's on the front burner of the newspaper, when you hear market has gained 400 and something billion, then that's the time to go and look at your portfolio. And that's the time to begin to rethink. Should I still be there? Or should I exit now and come back later? The day you hear the portfolio has gone down, the market has gone down by 128 billion, that's the date also to go and look on your portfolio and say, where is an opportunity to buy more now that the market is going down?
Exactly.
Because sometimes the life of a company is like a life of a man. He has his ups.
I was coming to that because the up, down, red, green, can you, explain?
Yeah, what it means the up, down in the Nigerian market, 5% and 10% up, 10% down. What it means, we have what we call the offer, we have what we call the bid. The offer is when a lot of people are trying to sell and very few people want to buy. Okay. The bid is when a lot of people are trying to buy, very few people want to sell. And at that time, in the offer time, the market will be red. In the bid time, the market will be green. So depending on where you are at that time, then you begin to say, well, is it red or is it green? But the stock market is not a straight line. It's a curve. It goes like this. So when the stock market becomes a straight line, it's no more the stock market, has become a caniso. So you need to be very, very careful once the stock market becomes very straight. So you need to, that's a red signal, because the market is not supposed to be bullish all through the year, and it's not supposed to be bearish all through the year. But you must have an understanding of how the market operates.
So for someone like me that I've talked about my December plans, is there any, investment I could still, try by the end of, we're closing the year and I'll still see a return? I think it's called a ROI, return on
equity.
Yeah, so.
Well.
And how does the return of, investment works?
Yeah, so they are like I said again, we'll go back to our trader, investor,
and speculator.
We have to go back there again. That's where the return comes. Now, if you are an investor, your return comes in capital appreciation and dividend payout.
I'm getting lost, guys.
If you are a trader, your return comes on just capital appreciation. If you are a speculator, your return also just comes through capital appreciation. Just one way. That's what I'm saying. You buy this amount, you sell high. You buy low, you sell high. So now, if you are now saying, oh, I'm looking at December, what is your strategy? Are you an investor? If you're an investor, fantastic time. Why? In December, between November to December, it has been proven that, especially Nigerian stock market, between the month of November to the first or second week of December, the market always has its down period. Why? It's time for festivity. Some investors are trading up their investing to create room for festivity. January school fees is coming, especially retail investors. And the data we've gotten from the Nigerian market said we have a lot of retail investors now. So that means the market will be bearish at that period. So if you're an investor, that's the best time to buy. If you're a trader now, that's still the best time to buy. If you're a speculator, that's still the best time to buy. Now, as an investor, from the month of March, April, May, it's always a time to reap from what you have sown, because most companies will be bringing out their results and they will be paying dividends. Then if you're a trader, between January and February is a time also for you to begin to sell. Because of the anticipation of the results, the prices go up. So it depends on what you want to do. You want to do a sprint or you want to do a marathon? So that will determine what you want to do in December.
Thank you very much. I really appreciate this session. Okay, we've come to the end of this episode. Is either you're an investor, a speculator, or a forex trader, or a trader rather. It's up to you. Choose whichever path you want. Till then, catch you up on the next episode. Bye, guys.